If you're thinking about buying or refinancing right now, your credit score can make a huge difference on that monthly payment. We got some information on that coming right up. Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
And I am Dylan Gaston. Thank you so much for joining us this morning. So we are in this era where the interest rates are very low. There's lots of houses that are being sold right now to the point where there's not a lot of houses on the market. We have more buyers than we do houses for sale. So it's a hot time right now. And one of the things, we're doing lots of pre-approvals for people. One of the things that we wanted to talk about today is credit, because since COVID, the credit criteria and guidelines have really tightened up.
It's changed a lot.
Dramatically.
Over the last few months, like the difference of before we could go down to a 580 where most lenders on your FHA financing could go down that low. Now we're at a 620. I like to say we're at a 640. But it's really 620.
Technically, it's 620. It just gets really ugly.
Even though FHA doesn't have a minimum credit score requirement, but every lender does in some capacity, in some way. I'm here to tell you, if you're under a 640, it's not easy. The extra layers of underwriting steps are not fun, but
not to mention how much it affects your interest rate, your credit score. Some people, but it's not the only thing that affects your interest rate that you're going to get on a loan, but it is definitely a big factor. And it could, the swings in your credit score make a huge difference on what you're going to be paying monthly.
Oh, big, huge. Have you noticed, Dylan, on conventional financing, even if you're under a 700 credit score right now, which we used to think, oh, you're amongst the elite,
right?
Your interest rate is going to be so much higher. It might be worth considering going FHA if you're a 699 versus 700.
I know.
Who would ever thought that?
Exactly. So the old days it was, if you have a 680 credit score better, you're great. That's top. You're good.
Even
Not
when
anymore. That's average.
When you factor in the MI,
right?
We had one just the other day. We priced out on FHA with a 696 mid score. The rate on FHA was up in the upper twos. Even adding in the 0.85 factor for the MI insurance, the conventional rate was going to be over 4%. So,
I know.
So what are we going to do for these people who are right on that cusp, and what can we do to help them?
Yeah. Well,
I got an idea. I say we call in the experts.
Yay!
Yeah, so this week, yay! Look at that, poof, he appears.
Ta-da! Our expert.
Yeah, we just pulled in. Hey, Michael, how are you?
Hello. How are we doing, Barry?
Good.
How are we doing, Dylan?
So we have Michael Mergner with Alpha Credit Recovery, and
Yes, sir.
and thanks for joining us today. And Michael's going to give us some tips on what's going on in the credit market, because COVID, I hate talking about COVID, but I know you're all sick of it, but it definitely has an impact on so many things. And Michael's going to share some of his wisdom today of what's going on out there and what we can do to maybe help these people that are at a 699 credit score, get them up over 700, because you know what? 1/4 or 0.5% interest over 30 years is a lot of money on these loans. So, Michael,
100%. People, when you look at the advertisements, they're everywhere on TV. You're going to see, lowest interest rates ever, 2%, 2.25%, whatever, and everybody's excited. Except that's like the commercial see for car lease, $299 for a brand new BMW. And then you got to read the fine print. You got to qualify for that 2.99% or whatever it may be. And I always tell people it's better to be safe than sorry. Be prepared. don't wait last minute. There's a big rush of future home buyers right now. And like Dylan, you mentioned earlier, there is a shortage of homes, right?
Yes, there is.
Supply and demand. As soon as interest went down, the properties, they started disappearing. And since COVID, the interest rates, not the interest rates, the credit requirements have gotten stricter for mortgages. And I've had a few clients that are right on the brink of purchasing a home. They're actually ready in February, and come March, that ended. And not because of lack of income, they were just a few points shy of the increase. Luckily, last 2 weeks ago or so, it loosened up a little bit, so more individuals are able to move in. But there's still COVID overlays with some lenders, right?
Yes.
As far as employment goes.
Well, it's actually with Fannie Mae and Freddie Mac, there's COVID overlays. So, and it's funny, I was talking to one of my girls yesterday, they didn't actually change the guidelines. They're just kind of putting temporary guidelines over the current guidelines, so overlays. Things will go back once COVID kind of ends. Then I think that, you know, the guidelines for Fannie Mae and Freddie Mac will go back down again to where they were. But yeah, you're right, there's a lot of overlays right now.
Now, and when I mentioned earlier, you know, better to take care of an issue prior to it being necessary. Since right about a month or two after COVID started, CARES Act came out, and there's a lot of good stuff out of it.
There is.
There's a lot of bad stuff from it as well that is particularly affecting my industry and my clients. Since COVID, at first the post office, they were slowing down certain machines or processing thousands of letters, replacing hundreds of employees. They're turning them down because of a lack of need. There wasn't as much business. Everybody's locked up at home, not much postal mail going from one place to the next. And the machines stayed locked down. So stuff is still delayed these days. And if anybody, I'll give you an example. Equifax is in Atlanta, Georgia, right?
Right.
I'm in Land O'Lakes, Tampa Bay area. It takes me about 6 hours to drive to Atlanta if I were to get there myself.
You're a good driver. I can't get there.
It's 8 hours, by the way.
6 hours for me. I slow down once I get to Georgia. Those cops over there, they're like, yeah.
Oh, sorry. You don't recognize that sound.
But yeah, so however long it might take one, it's still, you know, less than half a day. And I sent out a certified letter to the credit bureau on the 4th of August. It didn't get there until the 14th.
Wow. So 10 days.
Wow.
10 days.
Wow.
Just to get to Atlanta.
And you're right, you could have driven it much faster.
No real rhyme or reason, because there's other certified and non-certified letters that I've sent, and some get there a little bit sooner. You know, if they go to Texas or Pennsylvania, TransUnion's up in Pennsylvania, and some do take around that time frame. And when the pandemic hit, this is what really hurt me and my clients. Is the credit bureaus, under normal circumstances, have 30 days to do any investigations for any disputes or challenges. Right? It's our right. The United States Congress put in place the Fair Credit Reporting Act, and that's an act that helps us consumers protect it from practices that are not good for us, right? So anything that's on our credit report has to be accurate, timely, and verifiable. And if we don't agree with something, we have the right to dispute it with credit bureaus or challenge it. And they have that 30-day time frame, and the CARES Act enacted, it gave them an extra 15 days for their processing, which that would be okay if it was just a straight, hey, 45 days, every 45 days, give us a little bit more time. We're short-staffed. There's a national pandemic, not a problem at all. The issue is that another government agency, Consumer Finance Protection Bureau, that protects us consumers from shady credit repair companies and bad practices from the credit bureaus, they made out a statement that they're trusting the goodwill of the credit bureaus. We know what that means. And they won't sue them if they don't complete a dispute in a timely fashion, which normally it's a big violation, and it's easy to point out, hey, you didn't respond to me within the specific time frame. And they're kind of hands off. You pretty much might as well give guns to the mob and say, protect us. So things are moving a little bit slower as far as outcomes and results. And if somebody was thinking about purchasing a home in the next 6 months or a year, I wouldn't wait 3 months before you need to fix your credit, because we don't know what's going to happen in the next year. We don't know if there's going to be a COVID 2022 or everything's going to go completely back to normal.
So that's interesting to note to people, and something that you said before, and Barry had mentioned too, we're not really just talking to people who maybe had credit issues and they're like at a 580 or a 550 or even a 620, but this could be, and it could make a difference to people. You could probably help people even if their credit score is like a 680 right now or a 690 and they want to get to that 700 720 range to get the better. So the other thing that you said to me during the break, which I don't know that people know, so and now you did say Equifax is in Atlanta, TransUnion is in Pennsylvania. Where's Experian, out of curiosity? Texas. Okay. So, and some of them, you said they don't allow for, in today's technology, for whatever reason, emails or faxes or anything. It has to be a physical letter that goes in.
Well, so they all have options to upload documents. I don't recommend disputing online. You're limited to only so many options. There's over 300 data points on the credit report. They're giving you 26.
What do you mean by data points?
Different things that you can challenge and dispute on a credit report.
Oh, wow.
See, I'm not a magician. At the end of the day, my job is to find errors. And if, again, just to keep it simple, if it's not accurate, it needs to go. I'm never saying that'd be unethical of me, that something is not my client's if it's really theirs. Never tell them not to pay the debt. In fact, I tell them, please settle that debt once it's removed so the item doesn't get sold potentially to another collection company. But I'm not telling the credit bureaus that it's not their item. I'm just pointing out that, well, this particular item is not in check, or this piece of information is missing. Maybe the balance is off. Maybe the payment structure is off. Maybe the payment structure is incomplete. Maybe the date of first delinquency is wrong. Whatever it might be, that's how we're nitpicking. I'm a nitpicker.
What's funny is there's, Delin, you were talking about people with that 680 score, whatever. A lot of people have those errors on their credit report, and they're totally unaware that they even exist. I mean,
sorry.
Don't mind us. We're taping a show.
It's an alarm.
If we had a blooper reel, that would have made it. But we don't.
One of my alarms.
But a lot of people are totally unaware, and they're buying, it impacts them. They don't know there's an error on the report. So
right.
I agree. If you're thinking in the next 6 months, even year, you probably want to look at your credit now and make those adjustments, because, with COVID, being under 700 in a conventional loan, I'm telling you, is a huge, huge difference on the pricing. Even though you may get the loan, you're going to pay for it. These lenders out there are advertising I'm going to get a 2% rate. We all know you can buy a rate at any price. I always love when people say, well, so-and-so got this rate,
yep.
And why don't I get that rate? Well,
I hear that daily.
Yeah, what's your loan size? What's the loan to value? And what's your credit score? That's, part of the criteria.
So, Michael, let's just touch real quick, if we can, for people on what are some of the things that swing a credit score. Obviously, we know if there's a late payment or something like that, that's going to plummet your score pretty seriously. What are some of the things that they can maybe do, just quick fixes, to get their scores higher? Let's say they are at like a 680 or something.
The fastest thing to really maneuver is your utilization. And utilization is the second most important thing when it comes to your credit score. So what that is how much you're using based on how much you have available. Now, because of the pandemic, a lot, not just obviously lending, mortgage lending has been a lot stricter. Regular lending has tightened down I have a lot of clients that either before they came to me or during while working with me, even though I instructed them to pay off their credit card, the credit card might have lowered their limit, which affects their utilization, and they're losing points. It's always a percentage. So if you have $1,000 limit on your credit card and you're showing that you're using 800, that's 80% usage. Let's say you pay that card down to $100. You're doing the right thing, but you are a risk to that particular credit card company because of other factors on your credit report. They're always checking it on the back end, or maybe the current pandemic times, right? They need to time down on their lending. So you went down to $100 out of that $1,000 limit, and now your credit card went ahead and lowered your limit to $100. That's 100% usage. I mean, you're losing a lot of points because of that. It's unfortunate. Don't be mad at the company. It's a business decision. Just keep on paying your bills. I've helped a lot of clients pay off a lot of debt. I'm not a tax accountant. I'm not a CPA, so putting that disclaimer out there. But the silver lining with COVID is you can take out money from your 401k, and there's no penalty if you pay it back within 3 years.
Oh, is that a COVID
So I've had
thing?
a lot of clients.
I didn't know that.
I'm sorry?
That's a new COVID thing? I didn't know that.
Been going on for a few months, correct?
Oh, cool.
Obviously, reach out to your accountant, double check everything. Right. But in most cases, it makes sense. There's a downside. If the market rebounds, you're obviously going to lose on how much that growth would be in your portfolio. But if you're paying 20-30% interest on your loans and debts, and it's affecting you, you're losing money. When we've calculated it, literally how much the client is paying in interest on credit cards, if we just use that and spread it out for 3 years, they're paying their cards off for free, and there's no interest. And they just pay themselves back.
I love that analogy. Remember, Delino and I laugh when people call us and they're like, we're doing a consolidation loan. We're taking cash out on their mortgage loan. And they're like, I don't want to take that much cash out. And they got all this credit card debt.
I don't want to take the loan.
20 and 30% on. And we're like going to move them to a 3%, maybe tax adjustable situation. They're like, oh no, I don't need that much cash. I don't want to go that far in debt. And I'm like, you're already in debt.
I know.
You know?
You're already in debt. We're just showing you a better way of paying it back.
Yeah, and I'm scared that some people won't pay the 401k back. I'm just giving guidance, right? What makes sense. If they don't pay it back within 3 years, they're going to get hit with that 30% penalty, right?
Yeah, they'll get 10% penalty from the IRS plus whatever tax rate they are currently at. So that can be a huge hit.
But the key is to get your utilization down. Now, what about opening up new credit and such? Because sometimes people, I think, and maybe I'm wrong, but I guide them, they don't have any credit or they have very little credit. And I'll say, okay, they had like maybe 10 bad things in their past and they're all paid off, but they're still there. Or maybe they're, charge-offs or something from 5 years ago. They're still showing up, but they have only like one new credit card and it's got a $500 limit, and although they only have like $100 balance on it, I tell them, okay, you only have one good thing and you have 10 bad things. We kind of need to balance something here, don't we? Need to open up some
correct.
new. Okay.
Yeah, you want to have at least 2 to 3 revolving accounts. Those are your credit cards.
Okay.
It doesn't matter if it's a secured card or not. It's going to reflect on the credit report the exact same way. And 1 to 2 installment accounts. There's some really great programs out there. Back in the day, if you had no credit and you wanted to build your credit, what did your parents say? Go to your local credit union or bank, put $500 down, pay it back over a year, and you're going to build your credit. Well, that's a good advice, but that's a lot of money. I get a lot of clients that have limited credit, and they just have all they have is maybe a few negative items on their credit, nothing positive, and right off the rip, if I tell them they need 2 secured credit cards, that's $200 a piece, and you get a secured loan, that's $500. I haven't collected $1 for my services, and they're almost at $1,000. It's a lot of money. Most people don't have that. So there are programs out there where you can pay in installments for an installment loan, $30, $40 a month. It helps to build your credit. You get that money back. The secured credit cards, I always tell everybody, it's not the dollar amount. Like, you can go to your credit union or bank. First, make sure I don't know every bank where they report to their all the credit bureaus, but I tell the client, you got some odd bank and they do offer a secured card, make sure they report to the credit bureau. I want you to get credit for this. This is not to spend. This is to show up on your credit report and get points. And the dollar amount doesn't matter. I'd rather have somebody get two $200 secured credit cards than one $500 card, because we're doubling up the positive payments. Think of it like little Legos. Those old Legos from 5 years ago on those charge-offs that you mentioned,
Right.
they're out in the UV, they're deteriorating, they're almost done. They don't
Right.
mean that much. They're not that fancy and cool anymore. The new ones, we like the new shiny blocks. So I want to put as many as possible, but don't overdo it.
So clearly you have children that play with Legos, Michael, right?
I got a 3-year-old daughter, come on.
He does.
I stepped on a Lego or two.
Ouch.
So as you were coming on to join us today, you stepped on a Lego and it all just came crashing through. You're like, I'm using my Lego
She has
analogy.
this little cart, I call it the homeless cart. It looks like a little shopping
Homeless
push cart from Doug and Melissa or whatever it's called, filled with all our toys. Stuff
Oh,
on that.
that's hilarious. That's so
Ouch.
funny. Hey, what about authorized users? How does that impact credit? When someone signs up with someone and they add them on as an authorized user, do you recommend that or not?
I do, if it's the right authorized user. Ideally, you want it to be a very close friend or a family member. They call it trade lines online. There's shady companies selling them, and you can buy somebody's history. Somebody had an Amex from 1985 for $1,500, whatever it might be. You can buy that, and they'll add you to the credit report. That is pretty illegal
Yeah.
on many levels.
That doesn't
and if
even
you
sound
apply for a
legit.
mortgage with the trade line, I'm sorry?
That doesn't even sound legit at all. I mean, there's always a way.
No,
right?
but
People are
there's
trying to beat this.
peddlers out there, and it's a federal offense if you are artificially inflating your score and applying for a mortgage. That's a federal offense in there. So definitely don't advise on that. Close family member, ideally.
That brings up a good point. Tell me about this that you see advertised on TV a lot. I don't know if I think it's Experian Boost. Boost your credit score instantly. What is that?
Yes.
And is it legal?
Just like down payment assistance, it's free money, right? There's
I don't
no
know.
strings
What
attached.
is it? How does it work?
So Boost is, they're mining your data at the end of the day. What they do is you give them permission to access your bank account. Their little bot goes through your statements, and it will pick up any utility bills that you pay on time. The issue with Boost is utility bills aren't used for most lending decisions, not at this time at least, not for mortgages. They're used for utility purposes. So when you apply for an electric bill next time, you have a great utility bill credit score. Great. Maybe your deposit won't be $500. You can move in with no deposit. But it really doesn't do much for you, and it's specific only to Experian. So if that utility company in the future were to pull TransUnion or Equifax, you're not getting that benefit. It doesn't cost anything.
And
Do
it's
you really
only
want to give up your
boosting
privacy?
and it's only boosting that one score. And most lending institutions, definitely in mortgages, we use the middle of 3 scores. So it might have boosted
But it's also a different algorithm completely. It doesn't do anything for you guys. Nothing for mortgages.
So we won't even notice the increase in their credit score.
Nothing at all.
The other thing-
and there's companies out there. I'm sorry.
No, go ahead.
There's companies out there reporting, selling access to a program where if you're renting, you can report your rental history.
Yes.
That doesn't do anything for the mortgage process as well. So if it sounds too good to be true, it probably is. Check with a professional. Free is never free. There's something attached at the end of it always.
Yes, you're absolutely correct. Good information, huh?
Yeah, there's a lot out there. I mean, the effects of COVID, lending, buying a car, buying a house, insurance companies, all these things affect your cost to achieve these items, and credit is a big part of it. And it's so important to monitor your credit, get with
That's exactly what I was going to say. Definitely check your credit at least once a year, right, Michael? And there's ways of doing that. You recommend some of
Once
those?
a year is a little bit too long for me. I like to check on my credit once a month. I keep credit monitoring. I get alerts. It's good to know what's happening at all times. One thing that I really wanted to mention, we still have just a minute or two.
Yep.
The CARES Act did help us consumers in other ways, and I'm actually fighting something right now for a client where if you got into an arrangement with any of your lenders prior, if you're current with your payments and you made an arrangement, they call it an arrangement, but deferment, forbearance on your payments, auto loan, credit card, anything of that nature. During that period, they cannot report anything negative on your credit report. If you were late and you made an arrangement, they have to report it late until you're caught up, however long that deferment is. But double check and triple check. I'm seeing a lot of errors where the banks and lenders are not updating the credit files appropriately, and it is hurting individuals.
And I have seen that myself. You're absolutely correct. I have seen that as well.
People think it's a free lunch because the CARES Act, you got to watch it, you got to monitor it. Michael, great information today. Thank you for sharing. That's Michael
Pleasure.
with Alpha Credit Recovery. You can find him online, check his website, look him up. He's a sponsor of our Lunch and Learn, which I want to mention before we close out. Our next Lunch and Learn coming up, it's going to be a great one, September 8th. We're going to talk about social media, and it's going to be a great episode, and Michael will be on it, so you can connect with him again. He's been a long-time supporter of our Lunch and Learn, so look for that 11:30.
Long-time listener.
Yeah, he's one
and he's helped many of our clients.
Many of our clients, so check him out.
And I know a lot of you realtor partners out there have used him as well, so I know he appreciates that. September
8th at 11:30. Get the Zoom link, join us. Sorry we can't be together, but we'll be together via Zoom. So anyway.
Always a great time, good info.
Yep, great information this week. So just want to thank everybody that if you got questions about credit, reach out to us, reach out to Michael. Let's get you ready to buy a house. So.
And don't wait until the last minute. Like Michael said, just check your credit today.
Yep.
Find out where you're at so that you can make plans for your future.
Hey, share our show.
Thank you, everyone. We are Today and Every Day.
Moving forward. Have a great week.
We'll see you next week. Bye-bye. Thank you,
guys.
Michael.